This was a really strong reaction right after the rally and the rebound that we saw after the drop last week.
Yeah, we didn't even, it wasn't just the drop, but volatility came close to the highest in a year, as we just saw a lot of red on the screen. In fact, West Texas Intermediate briefly dipping below $65 a barrel for the first time since August. You're seeing Brent take a hit. Even natural gas, which was seen as a proxy for oil, at least for the heating season, taking a big hit. And if we drop into the Bloomberg, West Texas Intermediate, largely traded here in the U.S., down almost 22% from its recent peak of 85 in late October. So it is now officially in a bear market. As we've mentioned, Brent crude down just over 18% from its peak. So it is nearing its own bear market. And if we take a closer look at the big picture for West Texas Intermediate, we're closing out November with the biggest monthly drop since March of last year. Now, the oil market also dealing, as we know, with the Omicron variant, what impact that will have, more importantly, what OPEC Plus will do about all that. New travel restrictions are threatening the rebound in global crude consumption. That's been a very big part of the run-up in oil prices that we've seen. Layer on the fact that oil traders are tracking talks this week aimed at reviving Iran's 2015 nuclear deal. And then we've got the inventory data out later in the U.S. Wednesday. All of this could beef up the volatility in the coming days. Heidi?
And we also have the U.S. trying to smooth over these tensions with OPEC Plus producers, particularly Saudi Arabia.
Yeah, we do know that the top U.S. energy diplomat did meet with some of the top energy officials in the Middle East, particularly with Saudi Arabia's energy minister. Tensions between the U.S. and Saudi Arabia were likely exacerbated when the Biden administration went ahead with the release of oil from its strategic reserves. As you know, that's a move normally reserved for emergencies and natural disasters such as hurricanes. In this case, the move comes out of concern for high prices, both for gasoline at the retail level here in the U.S. and the high price of heating fuel as the winter approaches. The Biden administration has said it's prepared to release crude from the strategic reserve, continuing as need arises. And these talks, we're told, were a way of perhaps easing tensions as OPEC Plus prepares for its output policy meeting this week. Big question is how they will deal with the recent sell-off we saw in oil, just as there has been a concern about the new variant. We do know that that caused a big dip in oil prices last year. So OPEC was due to add another 400,000 barrels a day in January as they gradually revived the output that was taken off the market during the pandemic last year. That alone is going to be something that traders will be very focused on, what they decide to do. Do they pause the plan to raise output hikes? Traders are increasingly saying that is very much a likelihood. And that would generally nullify what was done with the release of the strategic reserves in terms of impact on price.